All right, so let's get started. Hi, everyone. Thank you so much for joining us today for this webinar. My name is Angela Huang, and I'm the head of marketing here at Urban Catalyst. So here's what we'll be talking about during today's webinar. I'll be introducing our speakers momentarily, and after that, you will learn more about NES Financial and the services they provide. Then we'll talk about the current state of the Opportunity Zone investments and what investors should look for when choosing an Opportunity Zone fund to invest in. Last but not least, we'll tell you more about the 7 projects that we here at Urban Catalyst have in downtown San Jose. So before we get started with the presentation, please note that we'll have plenty of time at the end of the presentation to answer any questions you have. So please add your questions using this Q&A feature throughout the presentation, and we'll be sure to address them at the end. Now, it's my great pleasure to introduce you to today's speakers. Eric Hayden is our founder here at Urban Catalyst. Eric's been a developer his entire career and has worked on many notable ground-up development projects here in the Bay Area. And now with Urban Catalyst, he's focused on revitalizing downtown San Jose. And our special guest today is Reed Thomas. He's the Chief Revenue Officer and Managing Director at NES Financial, a JTC company. Reed is in charge of overseeing the day-to-day operations and has been instrumental to the company's rapid growth. And he brings with him decades of experience in both public and private companies, and in particular in high-growth Silicon Valley tech companies. Now, without further ado, I will now pass it over to Reed.
Thanks, Angela. Thank you to Eric as well for having me on today, and good morning or good afternoon, everybody. It's a real pleasure to be here with you. Today's topic is on opportunity zones, and I thought I'd start off with a little bit of a background in terms of our company. So I'll give you some sense for who we are, more specifically what we do in collaboration with Urban Catalyst to help the initiative be successful. And then I'll transition into some general trends and current initiatives we see going on within the opportunity zone space. So NES Financial is quite well known in the opportunity zone sector. It's an area we've specialized in. We've been recognized by several various industry associations for our good work. So let's move forward and talk, Angela, or whoever's changing the slides, about NES. So we're headquartered right here in San Jose, not too far from where Urban Catalyst is. Obviously, our roots are Silicon Valley based. We got started with this idea that from time to time, there's well-intended investment initiatives that get created. And they're really intended to do good, but for one reason or another, they fail. Oftentimes, it's because the compliance and regulatory environment is such that the cost burden to manage it is too much. Other times it's because there's not enough of that, and various abuses enter into the system, and as a result, the initiative fails. So our thought was we could develop some technology which we could configure to be purpose-built for the various nuances of these different initiatives. And Opportunity Zones is a great example of one. Really, it's an investment fund mashed up together with a tax incentive program, and ultimately, it's an initiative that's intended to revitalize communities, urban or rural. So our technology is purpose-built and configured specifically for the needs of Opportunity Zones. We recently were acquired by a company called JTC. They're a London-based publicly listed company. And so as a result of that, we're now one of the largest fund administrators globally. We specialize in a variety of different types of funds that you'll see here, and I'll talk through those in a second in a little more detail. Next slide, please. So JTC is a company that has been around since 1987, listed on the London Stock Exchange. It is a global corporation. We have over $130 billion in assets under administration, with over 900 employees in 23 different countries. And it's a company that has been profitable every year and grown every year since its inception. So really the combination of NES Financial with our focus here in the US as a specialty fund administration provider, in combination with JTC, a global leader in fund administration as well as private client services, has created something quite special that we're all very, very excited about. And so let me talk a little bit about what we're doing in Opportunity Zones specifically now, and how we collaborate with Urban Catalyst for the benefit of their firm as well as for all of the investors. So this is an example of a technology that we've created for the Opportunity Zone space. It's a look at a portal from an investor's point of view. And it gives, so this is available to all investors in the Urban Catalyst community. And they can see in real time, investors can see exactly how the fund is performing. You could see where the fund is with respect to capital contributions, commitments, employed capital. Also in real time, see the investment rate of return, as well as the projections for the benefits associated with the program. And I'm sure Eric will talk more, and as many of you already know, there are various, there's ways to defer taxes, reduce taxes, and then ultimately benefit from no taxes on the appreciation of the investment. So all investors have access to this information at all times. But as I mentioned earlier on, Opportunity Zones is really a very specialized investment initiative. And there's very unique compliance and tracking requirements that must go on, both at a fund level as well as at an investor level, correct? At an investor level, to be compliant with the tax incentives and the initiatives therein, documentation and evidence and auditory trail must be kept in order to file taxes to achieve the full benefit. So our system helps with that. You can see there's a section there for documents. So all documents that you may need to remain in compliance can be stored there. But in addition, the fund itself has various compliance metrics that it's required to maintain. Has to make certain levels of improvements to assets it invests in within certain periods of time, and has to deploy a certain amount of capital, 90% in specific, into the actual Opportunity Zone. And so this is a tool that not only fund managers can use to make sure that they're remaining in compliance, but also it's a view that investors can have to see exactly what's going on with the investment profile. Well, next slide, please. And so this is another interesting view that shows for a fund that has multiple assets and multiple investments, as does Urban Catalyst, to have an overall view of the big picture of what's going on. So as you can see, this is a tool that's been purpose-built and configured for Opportunity Zones. So it's just like if you had what you might expect in your 401k or other investment portfolios, except it's been tuned to the nuances of this program. So very powerful thing, and clients of ours, like Urban Catalyst, who partner with us to do this, obviously wanting to make sure that investors have the most transparency possible. Okay, that's enough about NES and what we do. Let's talk a little bit about the industry and what we see going on. I get interviewed regularly by the press with respect to what's happening in Opportunity Zones as it relates to impacts from the current economy. So the way I sort of look at it is this might be the right initiative at the right time. The country's going through sort of a reset in a number of ways. Impact is an important thing to get the economy back and rocking and rolling again. And I think many of the things that are going on really do set up Opportunity Zones well. First of all, the February-March sell-off ended the longest bull run in history, I believe. And so that large market sell-off for many generated significant capital gains. And a lot of that sell-off was really done in kind of a rushed way, presumably without, for many anyway, significant amount of tax planning going into it. So some folks find themselves sitting on significant capital gains, which of course are going to be subject to taxes, and an opportunity to now plan on what to do with it. And one of the things that Opportunity Zone presents is a chance for you to look back, having realized a capital gain, and then deploy capital into an Opportunity Zone for tax benefit. So you have some time to do that. Normally it's 180 days, but with COVID-19, that has been extended through the year. So there's some time to plan, and it's wise of folks to look into opportunity zones now. So that's one thing, is you've created this big capital gain. The second thing that's going on is there's been a complete reset, it seems, in the economy. And so this is forcing many to look for different asset classes or different types of assets to invest in. So it's an opportunity to look for markets or real estate markets that might make a lot of sense right now to invest in. And so this is a very exciting time, because I think many of the asset classes that are well suited for counter-cyclical kinds of investments are well suited for opportunity zones. So good time to be looking at places like San Jose. And then finally, this spirit of giving is another thing that we've seen evolve here, trying to help communities in need. And communities in need, it's not just limited to remote rural communities in the center of the countries. There's needs in urban communities all over the country as well. And so what we've seen through this sort of COVID pandemic is people wanting to try to revitalize communities and help and give back and those kinds of things. So the combination of these three things, we really think, makes Opportunity Zones a very, very exciting initiative at this point in time. Let's go to the next slide, please. So a couple of trends. So, there was a survey that was done by EIG, Economic Innovation Group, and these are really the folks that spearheaded much of the original thinking behind Opportunity Zones, headed by Sean Parker originally, actually. And there was a recent survey of the industry done in the sort of the heart of the COVID pandemic as to what people felt the future of this program was. And as you can see, 58% were optimistic about the future of the initiative, which is consistent with, I think, the trends that I articulated just a couple of minutes ago. Next slide. So if you look at how distribution of investments has been happening, real estate is the predominant investment type over time. About 2/3 of all investments have been purely real estate. One of the things about Opportunity Zones is that it's not limited to real estate. It can also be, investments can also be made into operating businesses. And so we've seen, a combination early on. We saw predominantly all real estate. Then we started to see combinations or hybrids of real estate with operating business. Those two things represent over, more than 75% of the overall market. But we are seeing rapid growth in operating business investment more recently. The whole market is growing, I should say that. Real estate segment is growing, the operating business segment is growing. But I think we're also, in the recent timing, operating business investments have been of interest to some. Okay, so next slide. So how is OZ affecting the market? Sorry, how is COVID affecting the OZ markets? Well, I think what as I said earlier, it's really this combination of things that are lining up. There's been an economic slowdown and a significant job loss, and it doesn't matter what part of the country you're in, whether it's a rural community, an urban community, wherever you are. This has been a real-time experience, and we certainly in California and in downtown San Jose can see the effects of that. At the same time, there's been a tremendous interest in community revitalization. And also with the economic sort of cycle churning here, construction costs have been starting to stabilize. And so it's an interesting time for investment, the right time to kind of think about making different investments. And so those two things combined make the time right for collaboration with municipalities and working together to revitalize communities and create jobs. And as I pointed out earlier, many of the asset classes that are well suited for Opportunity Zones are really ideally positioned for investment at this point in time. So next slide. this will kind of wrap up, I think, and then I'll hand it over to Eric. So downtown San Jose is an interesting market. You know, we've worked here, our office is here in one of those buildings that's located on the picture here. And Opportunity Zones, right tool, right time, provides a solution for underserved communities. And areas like San Jose, I think, are important and will be important in the new economy going forward. So thank you again for having me, Eric, and the folks at Urban Catalyst. I'll turn it over to you.
Hey, thank you, Reed. That was a fantastic presentation. And by the way, we've been using NES Financial as our fund administrator for the entire duration of our fund. They've been fantastic to work with. All of our investors, which we have over 150 investors now, they really like the back-end portal that NES provides so that they can see really in real time what is happening with their overall investment. I'm going to go ahead and talk about Urban Catalyst. And I always want to start off by saying, you know, we've been getting pretty well known here locally in San Jose and regionally. We've been getting a lot of positive press. We've had over 100 news articles written about us since we started fundraising at the beginning of 2019. But what I'm most excited about is really the article that came out in Forbes magazine listing us as one of the top 20 Opportunity Zone funds in the country. It's really just national validation from Forbes that we are doing things the right way. To take a step back, I want to show everyone where the Opportunity Zones are in the Bay Area. Obviously, that's what's highlighted here in green. The Opportunity Zone program was created as a part of the Tax Cuts and Jobs Act in 2017, and the federal government put out, here is the criteria of what you can include as an Opportunity Zone. In general, they're lower income census tracts. And then they let the states choose 25% of those eligible census tracts in each state to be Opportunity Zones. Here in the Bay Area, San Francisco received 11 census tracts, Oakland got 28, and San Jose got 11. When I started Urban Catalyst, my plan was to create a real estate equity fund that was focused on ground-up development. And I was going to do business in downtown San Jose because we saw the macroeconomic trends of Silicon Valley all pointing towards downtown as the next place to do development. It was only after I started creating Urban Catalyst that I learned about the Opportunity Zone program, and that everywhere I was planning on doing development was already covered by the Opportunity Zone. You can see here that downtown San Jose has 4 zones that overlay almost the entire downtown. And so that's how we became an Opportunity Zone. We thought, boy, it'd be great to be able to give our investors the additional tax benefits associated with the program. I mean, and let alone that, you know, I've been working in and out of downtown San Jose for my entire career, and the revitalization of downtown San Jose is one of my passions. So downtown San Jose has 3 things that we want to see as developers whenever we do development anywhere. I mean, overall, the downtown area, you know, it definitely is it benefits from the Opportunity Zone program in the ways that it's supposed to, but it also is really the right place to do development. The first thing that we look for when we want to do development somewhere is we want to see that there is a demand for all of the different types of projects that we build. And that demand is created by the Silicon Valley job engine. The next thing we want to see is transit and physical infrastructure already in place. Downtown San Jose is really the only true urban environment in Silicon Valley. Diridon Station, slated to be the largest train station on the West Coast with multiple points of mass transit connection, including Caltrain and soon BART. San Jose State University, you really can't talk about downtown without talking about San Jose State. With over 35,000 students, and it's located right in the heart of downtown. It's the 2nd largest university in the Bay Area behind Cal Berkeley. And a little known fact about San Jose State is that Apple and Google hire more engineers from San Jose State than any other college in the country. The last thing we want to see, and probably the most important thing, is we want to do business in a place where local governments want to see development happen. And that's absolutely the case here in downtown San Jose. This is a picture of my partner Josh and I with the mayor of San Jose, Sam Liccardo. He's been the mayor for 6 years. Before that, he was the council member representing downtown San Jose for 8 years. And it's really the policies that he's put into place that have streamlined the pre-construction process and just made it easier for us to do business. Now, when I talk about those macroeconomic trends that were all pointing towards downtown San Jose and why we wanted to form Urban Catalyst to do ground up development in downtown, I'm really talking about tech migration. This is a map of Silicon Valley, and everyone knows that Silicon Valley has a lot of great tech companies, but when you see them all on a map, it really is pretty impressive how many major tech companies have a headquarters or a large office presence here in the Valley. For this example, I'm specifically going to focus on what we call the FANG companies. That's Facebook, Amazon, Apple, Netflix, and Google. Now, what these companies realized as they formed and started to grow was that it costs a lot to live in Silicon Valley. Here in Palo Alto, which you could call the heart of Silicon Valley, the average home price is $2.5 million. And if you're a Facebook employee, which Facebook pays pretty well, average Facebook employee would take them 28 years to save up a down payment to buy a house. So even if you work at Facebook, you probably still can't afford to live in Palo Alto. So what we find is that a lot of these folks live down here in San Jose and south of San Jose where it's more affordable. And while San Jose and Palo Alto are only 15 miles apart, during rush hour, that's an hour-and-a-half commute. And the large companies, they're realizing that their workers are losing productivity sitting in traffic. I mean, even with their private bus systems and their Wi-Fi on their bus, workers, they're not as efficient, and they don't really like being on a bus for 3 hours a day. I mean, the new millennial employee, they want to ride their mountain bike to work. So what these companies have done over the last 10 years as they've grown is they've really employed what we call a decentralized headquarters strategy. And they've made big moves southward into the city of Sunnyvale. And really that's because Sunnyvale had room to grow. To give you an example of the size and scale I'm talking about, here in the city of Mountain View, Google owns or leases 95% of all of the office space in the city. Here in Cupertino, Apple owns or leases 85% of the office space. And now in the city of Sunnyvale, Google and Apple combined have about 50% of the office space. Office development and a variety of different development types have just been going gangbusters in Sunnyvale for 10 plus years, but now the city's almost completely built out. And that begs the question, as these companies continue to grow, they all have 20-year growth plans that show how many employees they're planning to hire, how much office they need, where are they going to continue to grow? And the answer really is literally the next stop on the train, which is downtown San Jose. We've already seen Amazon and Apple come to downtown and take a toehold. Google has made a major move into downtown San Jose. And how has this affected downtown San Jose? Well, looking through the perspective or the lens of office, we've seen office rents double in the last 10 years. And at the same time, we've seen vacancy rates in downtown, which were higher than 20%, drop to below 10%. And that 10% line is really when a market changes from a tenant market to a landlord market. And just as a frame of reference, if you charge $550 here in downtown San Jose, you're charging upwards of $9 to $950 in downtown Palo Alto. So it's a significant discount to live or to work in San Jose, to have office space in San Jose than over other parts of Silicon Valley. To further on, the San Jose market and really what is happening in our downtown area, I want to show everyone this map. This black line represents the opportunity zone, and obviously this is downtown San Jose. Here is Urban Catalyst headquarters. NES Financial is also located right about here downtown, and one of the reasons we use NES, I mean, obviously we love companies that are based in San Jose, but just their services have been so fantastic and they've helped us so much along the way, really dot the I's and cross the T's when it comes to our fund compliance. Right next to Urban Catalyst headquarters, this is Adobe. Adobe, I mean, everybody knows Adobe. They've had their headquarters here for 27 years in downtown. They're in the process of building their fourth tower, which is a 900,000 square foot office building. Here's San Jose State. This is where BART will come down Santa Clara Street. It's fully funded to come and connect into Diridon Station. You see a couple of stations here in downtown. This is the SAP Center. We call this the Shark Tank because this is where the San Jose Sharks play hockey. And obviously you can't miss on this map. Here in purple, this is Google. Google in the past 24 months has purchased $450 million worth of property, over 80 acres. And their plan is to build 7.5 million square feet of office. And they've submitted these plans to the city. They're also going to build 5,500 residential units. When this campus is completely built, it'll be Google's largest campus on earth. It's scheduled to be complete over the next 10 years. And to give you an idea of the scale of how big Google's campus really is, in downtown San Jose, in the evening, you have around 75,000 people, and during the day, because people come into their offices, you get about 100,000 people. Google by itself will have roughly 75,000 people that come to this campus every single day, almost doubling the size of downtown. Also want to point out on this map here in orange, this is J. Paul. J. Paul is a regional office developer. He's been very successful throughout his career. In the last 9 months, he has purchased $650 million worth of property downtown. His plan is to build 5 million square feet of office. He's also already broken ground on this 900,000 square foot office high rise. And the reason I want to point out Google and J. Paul on this map specifically is, you know, here at Urban Catalyst, we had an idea, and it was, we want to get in to downtown San Jose, acquire property, really get in on the ground floor before the wave of developers and tech companies came to downtown. And that's exactly what we did. We acquired 7 properties in the downtown area. We have a very diversified portfolio of assets. All of our projects are real estate projects, ground up construction. We have a variety of asset classes. All of our projects we plan to break ground in 2021. Here in the Diridon Station area, we have 3 projects. This is a extended stay business hotel. It's a Marriott Town Place Suites. This is an apartment building, 8 stories. This is a senior living facility. It's assisted living and memory care. Here in more of the core of downtown, these are 2 office projects. Up next to City Hall, this is a high-rise residential project. And then down here next to San Jose State, this is a high-rise student housing project.
Eric, one of the things you often talk about is the lack of student housing at San Jose. And, I think that's always an interesting story. Yes,
and you know, I'm glad you brought that up. You know, student housing, I'm going to go back to this slide. Student housing is in a really high demand here in downtown San Jose. San Jose State University has really been undergoing a transformation in the last 10 years, changing more from what was a commuter school to more of a destination where when students are accepted to San Jose State, they move to San Jose and attend college. You know, you combine that with the housing crisis that we have here in California and the fact that San Jose State hasn't built a significant number of new student housing units over the last 10 years. And what you get is just a ton of demand for student housing. San Jose State's own internal statistics show they need roughly 6,000 student housing beds. This is one of my favorite slides because I just love this picture of Steve Jobs and Steve Wozniak. Urban Catalyst, you know, we're different than a lot of opportunity zone funds, and especially, you know, in general, what the opportunity zone funds that do market rate development do. And how we're different is most other funds, their plan is to go out and raise, you know, $1 billion and then scramble around the country looking for developers that have projects in opportunity zones to partner with. We look at Steve Jobs and Steve Wozniak here in Silicon Valley and say, did these guys go out and raise a bunch of money and then hire someone to build them a computer? And the answer is no, they built a computer and then they took it out to market. And that's exactly what we're doing here at Urban Catalyst. We're not just fund managers, but we're also the developers of all 7 of our projects. And we have 7 projects, and now we're taking those projects out to market to finance them. Another thing I like to talk about and make sure that everyone knows is, the Opportunity Zone program from a tax perspective is just fantastic. Also from, a program that creates positive social and economic impact in lower income areas. Overall, the design of the program is great. When we talk about the tax benefits to our investors and the reason why people invest into opportunity zones, we want to make sure that people don't get too hung up on the tax benefits. And that's because, if the biggest benefit from a tax perspective of the program, if you're an investor investing into an opportunity zone fund, is that after 10 years, you get tax-free profits. Well, there better be profits in order to get the tax advantage on those profits. And to get profits, you need to know, what are the projects that are in this fund, and who are the developers that are doing the development, because their track record and experience is the best indicator of future success. So while we're huge fans of the tax advantages associated with the Opportunity Zone program, we really see ourselves as just a solid fundamental real estate fund. And we look at the Opportunity Zone tax benefits as the icing on the cake. Here are some examples. Actually, these are our 7 projects in downtown. We put them all onto one slide just so you can see really the magnitude of what we're up to here in downtown San Jose. We were talking about student housing. This is our student housing high-rise. Kind of a shocking thing, Reed, to add to your point about, the demand for student housing in downtown, is that there was a survey done last year. And the students of San Jose State responded. 13% said that they had experienced homelessness in the previous 12 months. And to combat that, the university now has parking lots on campus designated for students to sleep in their cars. And that's really how intense the demand for student housing is getting.
Unbelievable story, yeah.
Mm-hmm. From an office perspective, these are our 2 office projects. We have Paseo and the Fountain Alley building. Fountain Alley building has got a lot of press because we're building Silicon Valley's largest rooftop bar. So you can see that up here. Down here, Paseo, of our 7 projects, 6 of them are ground up development projects. Paseo is a large renovation. We're renovating a 12-screen movie theater and creating 2 floors of office with ground floor retail. And what makes that project really special is because it used to be a movie theater, we have an average floor to ceiling height of 24 feet. That's really high ceilings. So we can do things like floating conference rooms, mezzanine levels, and catwalks that connect to our rooftop gardens. Madera, talk a little bit about Madera and the Icon. These are our residential projects. I talked about the housing crisis. I mean, the reason they call it a housing crisis here in California, and especially here in Silicon Valley, is we've created 5 jobs for every housing unit that we've built for over 30 years straight. And that trend is accelerating. We're not solving the housing crisis, but we're doing our best to solve it by creating more residential. And residential is always a very much needed type of development here in Silicon Valley. Delmas, this is our senior assisted living. Haven't built a project like this in downtown San Jose in 35 years. So it's very important that we create this type of facility in the downtown area. And then over here, this is our Marriott Town Place Suites. It's our extended stay business hotel. For those of you not familiar with that format, it's a hotel where our guests on average stay for 15 days and every room has its own kitchen. With the increased office demand in downtown over the last 10 years, it's also created a demand for hotels to serve that, and that is what Keystone plans to do. So overall, we're working to create a synergy in downtown to revitalize the overall area and create projects that don't just create financial or positive financial returns for our investors, but also are projects that the community wants and needs. Really fitting with the overall idea of the Opportunity Zone program. From an investor perspective, I want to go through how we return money to our investors, just so everybody can kind of understand how investors get their money out of Urban Catalyst as time goes on. We're raising money in 2019 and 2020. To date, we've raised just about $70 million. We plan to raise $105 million by the end of this year. I mentioned we have 150 investors. Our average investment size is around or a little over $500,000. Our minimum investment size is $250,000. And we're closing the fundraising portion of this fund December 30th of this year. First time that we plan to give money back to our investors is through our refinance and distribution program. This is pretty standard for developers, but I want to explain how this works. You know, we build our buildings, we lease them up, they stabilize, we go out and we get permanent financing. We take that permanent financing, we pay off the construction loan that we use to build the building, and then any excess refinance proceeds, we're able to distribute those to our investors tax-free. Right now, we're targeting distributing roughly 80% of our investors' initial investment back to them between 2023 and 2026 as our projects come online. You know, the Opportunity Zone program in general is interesting from a fund perspective because it almost creates a hybrid type of fund. You know, in the first 5 years, we're really a value add fund where we're creating value through ground up development. In the second 5 years, you know, we're more of a core fund where we have stabilized assets and we have cash flow that we're distributing to our investors. Also interesting to note, as a part of the Opportunity Zone program, because Urban Catalyst is structured as a partnership, we're also able to pass through losses. What that means is, you know, depreciation, for example. When you own a building, you depreciate it on your taxes every year. We do the same thing here with our projects. And we're targeting having more depreciation than cash flow in the second 5 years. And that would make all of the cash flow that we distribute tax-free. Finally, after 10 years, our plan is to sell all of our projects, liquidate the fund, and return the majority of the profits to our investors. That's really the big win for our investors. Of course, those profits are tax-free from a federal capital gains perspective. And one last thing I want to mention, which didn't get a lot of press when it came out at the end of last year, is specifically for Opportunity Zone funds. When we sell all of our assets, we do not have to pay back this depreciation. Typically, when you sell real estate, you have to pay back the depreciation. And it's called depreciation recapture. For Opportunity Zone funds, we have no depreciation recapture. Another major benefit for potential Opportunity Zone fund investors that they should know about, even though it didn't get a lot of press. Here at Urban Catalyst, I started the fund. I brought on Josh Burrows and Paul Ring. I really wanted to create an all-star team of downtown San Jose developers, and I did just that with Josh and Paul. Josh is our Chief Operating Officer. Paul is our Executive Vice President of Development and Construction. I've known both these guys for over 10 years. I've worked with them on multiple projects in the past. And now we have a team of 12 people that we manage doing the development and construction here at Urban Catalyst. Of course, we're not just developers, we're also fund managers. I brought on Morgan Mackles as our head of investor relations. He builds scalable and repeatable sales processes. I've known Morgan for, over 26 years now. We went to high school together. Sean Raft, he's our chief administrative officer. Sean works most directly with NES Financial, doing our fund administration. Sean's an attorney by trade, and here he manages all of our financial consultants, legal consultants, accountants, and fund administrator. Combined, we've done almost $6 billion worth of acquisition of real estate in Silicon Valley. We've done almost $5 billion worth of development. You can see the heavy concentration of development here in Silicon Valley. Here are some examples of some of the projects that we've done throughout our careers. Prior to starting Urban Catalyst, I was the president of Zarshan America, and I worked for 5 years on the Brooklyn Basin Master Plan, which is in downtown Oakland. At build out, that will be roughly 2,300 residential units. And while I was there, we also built this 244 unit apartment building. It is, well, I was just by it on Friday. It's got about 4 stories up now, started construction just as I left to form Urban Catalyst. So, you know, as fund managers, we brought with us a lot of the experience we have as developers, creating teams of consultants. And I want to point out some of our really prolific service providers that have the most expertise and experience in Opportunity Zone. Goodwin Proctor is our attorney. When I formed Urban Catalyst, there were only 10 multi-asset Opportunity Zone funds operating in the United States, and Goodwin had structured most of them. So really the go-to group for Opportunity Zone Fund structure and tax. Novogradac, we use them as our accountants. Novogradac has really branded themselves as the Opportunity Zone Fund accounting group. They do our tax and audit. And of course, NES Financial, our fund administrator, really the go-to group to do fund administration for Opportunity Zone funds. They monitor every dollar that comes in and out of our fund to make sure it complies not only with the Opportunity Zone regulations, but also with the SEC and with our own private placement memorandum. So with that, I'm going to turn it back over to Angela, who's going to go through a lot of the questions that everyone's asked. But I just wanted to remind everyone, if you do have questions, we would love to answer them. Please write into the Q&A box what your questions are, and we'll work to get to them.
Great. Thank you, Eric. So we do have quite a few questions that came up. So one is, when do we expect to start construction on the projects?
Sure. So all 7 of our projects are scheduled to start construction in 2021. Our first 2 projects should start in April of next year.
Great. So we have a question. There's a couple of sub-questions within that, but the comment is really impressive projects and some questions about them. What's the expected cost per unit for the San Jose residential building?
So, boy, we're still working on getting our final construction cost estimates for that project, but the cost per unit it's roughly $500,000 per unit to build it. That's an interesting question because depending on the different type of projects, we have 2 residential projects. One is wood frame and one is concrete. Concrete is just a more expensive type of building to build than wood frame. So it varies depending on project type.
And another question is, have there been any issues getting our permits approved through the planning approval?
There have been no problems with our projects getting approved. You know, that's been really one of the highlights of this pandemic has been the San Jose Planning Department and Public Works Department. I remember they called us 3 days after they announced the shelter in place back in March and said, we're going to be working from home, but we're still going to be processing your projects just as if we were in the office. And they have done just that. In fact, we now have monthly meetings with the head of planning where we get to talk about all of our projects, you know, the issues that we're trying to solve, and they've been extremely proactive in helping us solve those issues.
That's great. Reed, we have some questions for you as well that came up. So the question is, what information does NES Financial track and report for investors? And of the information that you do collect, what do investors find most valuable?
Yeah, we track, as Eric pointed out, you know, our role is to be the third-party administrator. And so we're tracking every dollar that comes in and gets deployed, and how it's deployed. We calculate, do all the accounting and financial statements, and provide all of that information back to investors. So our information really groups into 3 buckets. You know, there's sort of the financial performance information that we're tracking and measuring, and those are typical things you would expect to see in any investment. Then there's sort of the compliance related information that is required for ongoing compliance by both the fund and by the investor. So, you know, there's several unique rules that have been created for Opportunity Zone funds and the way they're managed, and things like, you know, how much of the capital that's been raised has been actually deployed into an Opportunity Zone, or what level of improvement has been made on an investment in an Opportunity Zone, those kinds of things. And those are the kinds of things that we track and report on in real time. And well, many of those are primarily of concern, I suppose, to the fund manager. You know, we've made it such that that information is easily shared with investors, because investors obviously should be concerned that should care that their fund manager is in compliance with those kinds of rules. So we do that. And then the final bucket is really on the impact side. You know, one of the goals of the program is to make a difference in communities. And this can be helpful to fund managers who are interested in working with the local community sponsors or economic development corporations. And also there's been quite a bit of dialogue in Congress about ultimately maybe making some of that reporting mandatory as part of the compliance effort. So it's something that we built into our system from the outset. So we do have all of that information, and should it become a requirement, companies like Urban Catalyst, with the foresight to decide to partner with us, I like to think, are well prepared to meet that compliance objective as well. So it's really those three areas, sort of the fund performance, the compliance aspect, and the impact reporting.
Great, thank you, Reed. And another question is, how important would you say is the location of the Opportunity Zone Fund, and how does San Jose stand out compared to other opportunity tracks in the nation, in your opinion?
That's a question for me.
Mm-hmm.
Yeah, I think as I tried to say during my presentation, as particularly with the sort of economic cycle that we're in. The perception, I think, often of San Jose is that, why would that be considered an opportunity zone? But the reality is, for those of us who live here or work here, we see the challenges that this community has and this area has, and those challenges are heightened given the state of the economy. And so, Eric talking about students sleeping in cars, being homeless, basically. These are problems that are probably not many people are not aware of about downtown San Jose, and they're real problems, and they affect people's lives. And so there's a lot of good that can be done in this community, and it makes perfect sense that it's an opportunity zone. The other thing about opportunity zones is it's intended to be an investment opportunity for people, right? So San Jose, I think, is unique in some respects, in that it combines a great investment opportunity for all the reasons that Eric described. You have this sort of tech heartbeat, this migration of tech companies to downtown San Jose, a big university. And so it's not only attractive from, I think, an impact perspective and the potential for doing good here, but it's also attractive from an investment perspective and for investors to generate a return.
That's great. And Eric, a question for you. Has the pandemic at all affected the development costs, such as construction and others?
That's a great question, and something that everybody's been watching very closely. Here in Silicon Valley, it's the most expensive place to build new construction in the country, if not the entire world. Construction costs since 2008 have gone up over 100%. And typically what we see, I call it historically, is that construction costs go down when we have recessions or pandemics like this. In 2008, we saw construction costs go down by about 20%. And here at Urban Catalyst, that would be a really big deal for our investors, because we have over $500 million in total construction costs, and a 20% discount would be $100 million cost savings. Now, so far, we've only seen around a 5 to 10% decrease in construction costs, and we typically don't see any decrease at all for maybe 9 to 18 months following a shock to the system. So seeing it 5 months is really surprising to us to already start to see that out there in the market. And, it just goes to the point where Reed was saying earlier about how now he's seeing just the swell of folks that want to invest into Opportunity Zone funds, because for ground-up development projects like ours, construction costs are the biggest factor when it comes to how much financial return we're able to give to our investors. And if you're seeing a 20% discount in construction costs, and that's the equivalent of investing into a distressed real estate asset fund. And that's usually what a lot of investors look at when they want to invest in funds, is they see, well, I'm going to wait till the next downturn and then I'm going to invest into a distressed fund. It's almost like Urban Catalyst, we weren't built to be a distressed fund, but we have the potential to show the types of returns that distressed funds are able to. And at the same time, you're doing great work helping an economy recover, helping an area that really needs the type of development that Urban Catalyst is creating.
Thank you, Eric. So let's see, another question. How do you see the impact of this new work from home trend on your properties for office projects that we have?
Oh, so this is a question for me, Angela?
That's right.
So, obviously we've been hearing a lot about work from home. I mean, the story of tech migration and what is happening in Silicon Valley, that's a lot of the story of San Jose. So, as usual, what we do initially, of course, is we look at what the big tech companies are saying. I mean, we saw early on in the pandemic, a couple companies like Twitter and Facebook say that, Twitter said all their employees are going to work from home forever. Facebook said they're going to transition 50% of their employees to working from home over the next 10 years. But lately, we've been seeing a lot kind of a different story. We've had Google come out and say all of our employees will come back when it's safe, and where they defined, when they think it will be safe. But they said when it's safe, they're all going to come back. And in fact, we probably have to have more office space because we're going to have to socially distance. And to put that into context, what that means, 15 years ago, here in Silicon Valley, the average office space per worker was around 400 square feet per worker. You can think back in the time when we had cubes and a lot more private offices. Since then, with the modern office floor plans, we're seeing these tech companies just put a lot more people into a lot less space. Facebook and Google both average one employee per 150 square feet. I mean, WeWork had a whole business plan of getting people into one person per less than 100 square feet. Now, is that trend going to reverse because of social distancing requirements? And if so, is that going to offset people working from home? I mean, obviously people are going to be working from home, because if you had to socially distance and say have one person per 250 square feet, that means 20-25% of employees are going to have to work from home because they can't come into the office. So how is that going to play out? It's a little too early to tell. But overall, Silicon Valley is a very strong job engine. And one last thing I probably should mention. Here in downtown, two properties, they sold for record pricing in the middle of a pandemic. And you kind of scratch your head and say, why would two properties, both were high rises, one was an office and one was a multifamily building, why would these properties sell for record pricing in the middle of a pandemic, especially office? If everybody's going to work from home, why are big institutional office investors purchasing high-rise office buildings in downtown San Jose? And the answer is that San Jose has become the real flight to safety for these institutional groups. They're looking across the country at which geographic locations are going to recover quickest from COVID and which ones have the strongest economies that they feel the safest in. I know that Bloomberg and Forbes have both written articles talking about which cities are going to be the fastest to recover. I know San Jose State has been in the top 5 in most of them, and that I think Bloomberg had it as the #1 city for recovery. So we're still seeing a strong demand for office purchases from institutional groups, even though most of the tech firms have put their office leasing on hold, because they can always lease office when it's safe to come back into the office. And when that is in the next year or so, there'll be a strong pent-up demand to lease office.
One question I think either Reed or Eric, you can answer. Can you reiterate the tax benefits of investing in an OZ fund?
Sure, Reed, you want me to take this one?
Sure, go for it.
Sure. So there are 3 primary benefits for investing into an opportunity zone fund. If you have a capital gains event, you have to invest capital gains in order to get the tax benefits. And by the way, a capital gains event, it can be short-term or long-term capital gains, and they're typically defined by either the sale of property, the sale of real estate, or the sale of a business. If you invest those capital gains into an opportunity zone fund within 180 days of the capital gains event, the first benefit you get is you're able to defer paying taxes on those capital gains for 6 years. So you're really paying them in 2027. The second benefit is that when you pay your taxes, you get a 10% discount. So for every $100 that you would have owed in taxes, you only have to pay $90. And the third benefit is the most important benefit, which is after 10 years, all of the profits from the Opportunity Zone Fund itself are tax-free from a federal capital gains perspective.
And another question about our projects, can an investor pick and choose what they want to invest in?
So here at Urban Catalyst, if you invest in Urban Catalyst, you invest in all 7 of our projects, invest equally. Now, obviously, investors get to pick and choose which type of investments they want to make as far as other Opportunity Zone funds or just the whole spectrum of different types of investment opportunities.
Let's see here. So one last question. Is there a minimum investment amount to invest in Urban Catalyst Opportunity Zone Fund?
Yes, our minimum investment amount is $250,000.
Okay, I think those are all the questions that we had. Thank you, Eric, and thank you, Reed, for joining us today. And for all the attendees, if you have any additional questions or if you would like to find out more about our projects, please visit us at urbancatalyst.com. Thank you again for joining us.
All right, thank you, everyone.
Thanks, everybody.